and welcome to Money Matters. My name is Nev, and I am excited to talk to you today about what's going on in the world of crypto. I love this particular industry, and I always kind of go back and forth between the different asset classes. And the reason I love real estate is because it moves really slowly, gives me plenty of time to act and react. And the reason I love cryptocurrencies because they move super fast. So your ability to kind of jump in, potentially make money, develop things, and really change the world as a whole is beyond exciting to me. And so, in today's episode, we're going to talk about what's going on with European banks and the relationship with the cryptocurrencies. We're going to look at how negative interest rates are impacting people's decision whether they want to get into crypto or not, and where people stand. And of course, we're going to look at market capitalization, learn a little bit more about what's going on with EOS, and is it still good? Should we go with Tron or switch to something different? So, anyways, we have a lot to cover, and I am beyond excited to be here and cover it. So, let's do this. And good morning. Welcome to Money Matters. I want to welcome everybody who is here on the live chat, watching it live only on onedealaway.com, broadcasting every single morning at 7 a.m. From Providence, Rhode Island. So excited to be here. For my international viewers, if you have no clue where Providence is, it's okay. It's like the tiniest state in the Union ever. If you blink, you might miss it when you drive through it. So the easiest way to explain to everybody is think Boston and then drive 60 minutes. That's it. So you might as well. And actually, when I said that to a couple of folks over in Europe, they said, "So you live in suburbs of Boston?" I said, "Well, not really, but that's okay." All right. Enough joking around. Let's get down to business and take a look at this stuff. So today is June 13th. It's a beautiful Saturday, and we are working hard as always, and studying, always learning stuff. So now is the time to take a look at sort of what's going on in the world of crypto. And as we can see, Bitcoin is still on top, followed by Ethereum, then Tether, then XRP. And the rest are sort of quite much further ways away before catching up. If we go in and take a look at performance, you will see that Verge Sia Coin, my apologies, EOST, Komodo, Synthetic Network, Digibyte, Blockstack, and Swissborg are sort of in the top. Of course, Verge reporting almost 30% increase in the last 24 hours. And biggest losers, Quant, Zilliqa, Divi, Flexicon, Aave, Energy, Nano, and Maker. These are ranging anywhere from 3% to 9%, with Quant being the biggest loser, so to speak. It's very interesting to see that some of these have actually gone down. But I guess that's what happens in the world of crypto. One day you're up, next day you're down, and you never know which day is going to bring what exactly. So we can talk about long term, whether we think it's going to be good or bad. Short term, you never know it, because these markets are not still at the high level capitalization. So very small number of people or even individuals can go in, buy a relatively speaking large amount, which is going to basically pump the price up. And then you of course have on the other end, you could have a one individual dump a large sum, and it basically decimates the crypto. So that's what happens when you have a very small market cap number, right? And so it's much harder to do that with Bitcoin, although it's possible when you've seen it, but it's much easier to see with something that has much smaller market cap. Of course, it's much easier to move Bitcoin than it would be to move gold or real estate, just because there's such large markets that, I mean, I can go in, even if I had 1,000 properties, and I can go in and dump all of them, it's not going to touch the market whatsoever. But if I had 1,000 Bitcoins and I dumped them, yeah, there is a potential that it could move it somewhat, right? So I want to actually take you a little bit into the history of money. And I found this to be very interesting. And you will never going to guess where I actually found this unless you really read the details in the small print, as they say. This I found on Deutsche Bank website. Yeah, Deutsche Bank. So they're talking about the evolution of money, right? And they're talking about the beginning of the Stone Age, how it was like goods and natural produce were bartered. And then around 2000 BC, shells were used as payment in Africa, Asia, and Oceania. Then you have 600 BC, right? And it's sort of first standardized coin that is, being put in modern day Turkey and being used. Then 1024 AD, first state paper issued in China. Yeah, China was the first one to issue paper money. Then we jump. This is really interesting. Look how far nothing developed from 1024 AD until 1950. That's what, like 2,000 years? Okay, not exactly, but pretty dang close. You have no, sorry, not 2,000 years. I just lied to you. Almost 1,000 years. Then you have Diners Club, right? And it was the first issuance of credit cards. And I actually remember, I don't remember 1950s. I'm not that old. So, I don't want you to be like, what? He's lying. But I remember when the Diners cards became sort of popular back in the 80s, so 30 years after its first issuance, when it came to Yugoslavia at the time. And I remember my mother kind of looking at that and we tried to use it. And you had those like large clunky machines, metal machines, where you had to put it in. They would put that carbon paper and go, right, go back and forth to actually print it. And it was used very much as a check still, like it wasn't automatic, it wasn't right away. And it was very interesting to kind of look at it. And but it's interesting kind of how they have their math a little bit wrong, because we went from, oh no, never mind, they don't have math wrong. Nev needs to drink more coffee. Oh my gosh. So Nev needs to pay attention. They taught me in school you'll read left to right, not left to right, then right to left. So this makes more sense. 19th century paper money became global means of payment. 1922-23, hyperinflation in Weimar Republic. The value of one gold mark goes from 120 to trillion paper marks. Then we got the Diners Club. Yeah. So anyways, that's way to go, Nev. So you probably caught on to it. Some of you might have canceled and sort of exited the view, which is fine. I understand. Totally get it. And then, of course, in 1991, Eurocheck cards launched as payment methods in Europe. In 1999, first PayPal transaction. Can you think about it? And you know what? The cool part is we actually have people that are in business, that are working, that have never lived before PayPal transactions. Can you think about that? Can you reflect on that, right? And then 2009, first Bitcoin transaction. 2018, 535.2 million people, payment users worldwide when it comes to electronic payments. So this was a very cool thing to kind of take a look into it. And I thought it was really cool to just sort of reflect on kind of how the history has gone. And another interesting thing that I also found, and as you can see, from Deutsche Bank as well, because it's easy to tell, right? Like this sign over here is definitely not helping to keep it obscure, not that they would want to. But one of the things that they looked at, and this is, of course, if you pay attention and you look at the dates right down here, this is 2017 through right into that sort of 18 where it kind of crashed, which December 2017 is when it actually went through the roof, and then it started to go down after that. And they're saying number of Google searches and price levels develop in parallel. So you have price in USD, which is the light blue color, right? And then you see the Google search request, which is the dark blue color, and kind of how it goes. And what it shows over here says right here in May, the price of one Bitcoin broke through 2,000 mark for the first time. And in December, record highs alternate between search requests and price. So one of the things to pay attention to, not just in cryptocurrencies, not just in blockchain, but also stocks and bonds and everything else, when you see the surge of a particular search item. So this is where the Google searches and trends and stuff research is really, really important to us as investors. When you see the surge, you can expect that the price is going to go to the roof, but you could also expect that it's going to come back down in a very short order. And that's because you have people who have never invested, who don't understand it, who don't know what's going on, start to jump in, and that's very bullish. But when those numbers actually start converging and creating very, very large amount of people kind of going in it, you can expect that it's going to come in a peak and sort of drop. And so when I did the recording earlier this week, I think Tuesday or Wednesday, what I was doing is I was actually looking at the number of searches of people going and saying, how do I invest in stocks? That basically means that people who never invest in stocks, who never bought a single stock, don't have what's going on, think that it's a great time to buy. And obviously, if you have been doing any research on the markets, on the psychology of people, and kind of how things behave and how the relationship of the price and what people do and how they behave are correlated, you quickly understand that, you know what, people are going to start jumping in at the very top, just like over here. Look, they're going to see how many surges. I mean, the searches just went through the roof. And of course, they continue a little bit after it kind of drops. And then eventually they sort of give up and say, this doesn't work. I lost all of my money. Well, yeah, you bought at the top. That's why it doesn't work. So that's the reason why I was able to go in a couple of days ago and talk about the whole concept of, well, yeah, I expect that there's going to be some sort of down in the markets because so many people were jumping in without understanding of what's going on with the markets, and they were, people were buying just about everything and anything they can potentially think of buying without the regard of, is this even good? Like, does it make sense for me to buy this or not? And so that's kind of where we were where I was able to kind of come up with what's going on in the world, and what I was expecting to happen with the stocks, and why I was saying are we going to crash? And the very next day, obviously the markets have closed down, and yesterday they didn't do so hot either. So there you go. So this is an interesting article that I have found. Actually, I found quite a few different interesting articles that I wanted to talk about. So first one is coming out of BNT, and it's talking about the cryptocurrency predictions, where to invest in 2020. And I found this to be very interesting. I definitely like the image. And so I found this interesting, and I figured, why don't we go through it together? As you can see, it's not highlighted. And I wanted to sort of give my commentary. Of course, you are entitled to your own opinion. By the way, this is not a financial advice whatsoever. We do not give financial advice. We are big on financial education. And if you don't know what you're doing when it comes to investing in anything, whether it's stocks, bonds, ETFs, real estate, precious metals, commodities, cryptocurrencies, you need to spend a little bit of time and money to learn first, and then put your money into things. Many people lose money because they don't know what they're doing. They do a quick Google search on something, click on a few buttons, and they get themselves in trouble and not even realize that they have done that. So here's what they're basically saying over here, saying these are the things you should invest in 2020. First one is Bitcoin. and they're basically saying that, hey, Bitcoin price prediction 15,500 for 2020. They're saying, you should be investing in it. There's, more people are jumping in it. And I agree. Bitcoin is probably one of my, when it comes to cryptocurrencies, one of my top holdings and things that I believe in very, very strongly. Not a Bitcoin maximalist. There are some other projects that I do like and believe in. But Bitcoin is definitely, if you look at sort of the portfolio share, if we think about it, it is by far the largest. Now, when it comes to the price prediction, 2020 price prediction of 15,500, I don't know. I don't pedal in the short-term price prediction of, is it going to be this, is it going to be that. I look at it more on the long term. In long term, I fully expect that Bitcoin can range anywhere from, I would say, shorter term, about $87,000 per coin, longer term to 1 million or more. Now, again, am I going to be right or not? Only time will tell. But that's kind of where I sort of see the whole piece. Now, they're talking about Ripple and saying people love to hate on Ripple, but what they get lost is the fact that it's one of the more centralized cryptocurrencies in the market and being project to deliver arguably most value in the economy. I don't know. I have mixed feelings about Ripple. The company I'm good with. The coin, way back when I wasn't quite sure what I was doing, I did buy into it until I realized it is highly centralized and it is being used as liquidity pool for the company itself. At that moment, I basically exchanged it, and I no longer hold it, nor do I plan on doing that. So you can do whatever you want, but the fact that it is centralized is one of the things that I didn't like about it. And I also didn't like the fact that it's used as liquidity pool to basically improve on their stock. And that's I have an issue with that. But they're saying price prediction $1.25. I don't know. Ripple has been flirting between around 20 cents for so long that anything is possible. But that would, that would be, the part that is interesting about their prediction is to say that Bitcoin, which has been steadily keeping in the mid to high 9,000s, keeps flirting with the 10,000. They're saying it's only going to go up $5,000. That would be basically like maybe 50%. But Ripple, that has been trading at 20 cents, is going to go up like sixfold, something like that. So it doesn't make sense to me, but we all have different methods of evaluating. Monero continues to fly under the radar in almost any conversation but cryptocurrency investing. We're sure that Monero funds that preferably always, given the fact that privacy is main selling point of Monero, presents the hardcore vision of privacy, and has a extremely depressed price but a healthy future as the gold standard in privacy coins. I don't know. I'm not as I haven't been really going hardcore with Monero. I think that some of the stuff with privacy, I think that that's cool. I think that the Bitcoin offers quite a bit of privacy because of the way that the transactions are sent and received. But again, I don't have anything necessarily against Monero. So anything is possible. As far as the price prediction, I got nothing. I haven't looked into the project, so I can't tell you where I sort of stand and whether that would be it or not. Ethereum, if Ethereum goes away, then you'll know that the rest of the modern cryptocurrency projects have gone away as well. Much of the coins that are thought as the future of cryptocurrency are built in Ethereum's technology, and they continue to provide value to cryptocurrency users. So I absolutely agree. Vast majority, the number of people, and we're actually going to talk about more about what's going on with Ethereum and some of the other sort of blockchains in a moment, and why I'm very, very bullish with Ethereum. So I agree, it's one of the cryptocurrencies that I also do hold in a rather large proportion. And they're saying price prediction of 650. Again, I think they might be missing a mark here because, again, you have something like Ripple, going 5-6x or more, and then you have something like Ethereum that it's going to go from 250 to 650. I have a hard time seeing that, and even in a short term, I see this Ethereum being as one of the probably fastest growing cryptocurrencies, or Ether actually to be correct, fastest growing cryptocurrency projects ever. And so just because of so many things being built on it, and when I share with you one of the next articles in today's episode, I think you'll see what I'm talking about here. And finally, we have VeChain. Now, they're saying VeChain may not be a coin that you hear about often, but behind the scenes, they have one of the most skilled and active teams in the entire industry, bringing blockchain solution to everyday business applications such as inventory management. And they're basically saying that, they are doing extremely well, which, they do have a good team. And what they're saying about the price prediction is 2 cents. Now, again, I haven't looked at this one as much, but I definitely will, and I definitely should. There's so many different projects that I haven't been able to get into because of some of the major other things that I'm working on. But now, thanks to this article, I will definitely check out the VeChain and Monero. A bit more familiar with Monero than VeChain, I won't lie, but I will definitely look into it and kind of take a look at what's going on. All right, so time to switch gears a little bit, and we're going to go into some of the banking stuff that I wanted to share with you. And, one of the first things is that the blockchain firm is pitching central bank decentralized coin or digital coin operating system to Bank of England. And UK-based blockchain firm L3COS has submitted a proposal to the Bank of England for a blockchain-based operating system to power central bank digital issued currency. And they are very bullish about the whole thing. They're very excited, but the central bank emphasized that it has not yet made a decision whether to introduce CBDC or not. So another piece is to kind of consider is U.S. position on the digital currency is still unclear. Recent discussion surrounding the digital dollar in U.S. have restoked this discourse worldwide, and the position of the U.S. is still unclear, with persistent warning concerning the impact it may have on commercial banks. Which, if they go digital, I don't know. So we'll see. There's going to be a lot of very large disruptions coming our way in the financial world in the very near future. China and the rest of the world, or actually merging. So they're focusing just on China here, but we're going to see some of the other countries, what's happening. Domestically, it could be deployed really quickly and widely used, and people won't even know the difference or anything has changed, because in China, everybody's using one of these to go in and basically swipe and stuff, and so it's backed by digital fiat. And so if it becomes truly the sort of the cryptocurrency, so to speak, they're still going to be using the apps and stuff. So individual in China is not going to see much of a difference, but the rest of the world will see the impact. China's regional trading partners will be encouraged and offered incentives in exchange for using its CBDC for trade, financing, and settlement. Many governments are making moves to trial, with the Bank of Ghana's first deputy governor recently reaffirming the institution's commitment to piloting a state-issued digital currency. So there you go. It's starting to blossom and change everywhere almost instantaneously. The U.S. is sort of saying like, we don't know how we feel about it, but it wouldn't surprise me if under the hood or behind the curtain, or however you want to, whatever analogy you want to use, that they're going in and that they are going to be using the sort of still developing stuff only to basically come in and change it the last second. Now, this is an interesting one that kind of follows in the same footsteps. Is the Central Bank of Saudi Arabia is placing liquid funds in local banks using blockchain. So they're very much heavily on blockchain, and the central bank of the country announces that it will use this blockchain technology to place funds in local banks. In the Middle East, the use of blockchain technology is the financial sector is widespread. Large Turkish bank has completed the first international blockchain-based trade finance transaction. Another report says that nearly 40% of fintech firms operating in Hong Kong use the blockchain technology, or the decentralized. My gosh, my brain has just stopped work. DLT. Let's just go with it because my brain is a bit on the fried end, and clearly I did not have enough coffee, and I didn't drink it. I only brought some water over here, but clearly I will need to drink more coffee before I continue to work and develop stuff. So there you go. That's kind of where we are with this stuff. So it's interesting to me to see that we have so many banks and countries starting to really play on the decentralized ledger technology. See, I caught on eventually. It's firing. It's just not firing fast enough. So that's kind of where we are with this stuff. Now, there is another piece that is also interesting when it comes to the banks and my sort of case why and how cryptocurrencies and blockchain will completely transform all of the banking sector, all of what we think of money, how we interact with money, and sort of how money is used. And so here is another really interesting article. European bank uses stablecoin instead of SWIFT for cross-border transfers. This is mind-blowing and absolutely amazing. So we have a Europe's bank basically saying goodbye to SWIFT and saying hello to USDC. So a Liechtenstein bank. Liechtenstein is basically a super tiny country, but a very important country in Europe. Base Bank is ditching the entrenched interbank settlement service SWIFT in favor of more contemporary solution, the USDC. One of Europe's preeminent blockchain banks offering crypto trading and custody for institutional clients is swapping out of SWIFT to USDC. And what they basically said is the head of blockchain banking at the bank said, we enable our customers to process USD payments quickly and token-based. Then the processing time is significantly reduced compared to SWIFT. So the Society of Worldwide Interbank Financial Telecommunication, or SWIFT, has remained in use by major financial institutions since its origin in the 1970s. And here is the challenge with the SWIFT. It uses COBOL, uses very old technology that nobody else uses. I joke that higher education system as a whole is stuck back in the 20th century, and as well as the real estate, right? So I argue and I jokingly say about that, and you would expect that the banks would be a bit on the forefront of it, but they're not. They're using old methodologies and old technologies that are very, very slow. So when you use SWIFT, for example, you wouldn't use SWIFT if you're sending money from Bank of America account to Wells Fargo from, like, I don't know, New York to Los Angeles. You wouldn't use SWIFT because it's part of the same country still. But when I send money to family or friends or business partners and associates in another country, say in Europe, I have to use SWIFT in order to do that. And it takes forever. It can take up to 2 weeks sometimes even a month to transfer money, okay? Now, when you switch over to cryptocurrency, to a stable coin, I can literally press a button on my phone, right? I don't have to go anywhere. I don't have to fill out any paperwork. I don't have to fax anything. I don't have to give my blood type or any of the crazy stuff. Okay, they don't take your blood type, but I think you understand what's going on. So I can easily go in, click on a thing, and it within seconds, maybe minutes, it is delivered to whomever I intended to send it to, and it's done. That is huge when we're talking about business and ability to do business. And that's kind of what we're talking about over here, right? So, created under collaboration between Coinbase and fintech firm Circle, USDC, like most stablecoins, is pegged 1 to 1 to US dollar, providing the stability of fiat currency with the utility of digital asset. This is the part that is cool. So you don't have to necessarily worry about like if it's Bitcoin, am I going to like overpay or underpay, right? Like, what if I send Bitcoin today and when I send it, it's $10,000, but when they receive it, it went up to $12,000. Now I overpaid. Or as a recipient, you're like, well, yeah, they sent me 10,000, but now it's valued at 10,000 worth in US dollars, but now it's valued at 9,000 because a whale sold everything. So that has risks right now. Now, I do see in the future potentially that sort of volatility to sort of slow down once the market becomes mature and much more stable. We're still very much in the young market, in the sort of new age time, and so there's still a lot of volatility. We're still not at a large enough market cap where it's going to slow down this volatility piece, and so that's why it's amazing for trading and holding, but not necessarily maybe for payments quite yet. And that's where the stable coins come in incredibly helpful and healthy to be able to do that stuff. Now, Bank Frick's addition of the USDC is part of growing trend among financial institutions, a trend we're seeing and expecting to surge in the year ahead. USDC has added over 230 million to its market cap, bringing it to around 750 million. So there you go. This is kind of what's happening and what I find really interesting. And like I said, this is just between the fact that the banks are jumping on the blockchain, that they're starting to use stable coins as form of payments, that they are starting to abandon stuff. All of those things are making me very, very bullish long term on cryptocurrencies. Obviously, the stable coins, you can be bullish as far as their utility, but when they're pegged 1 to 1 to dollar or whatever, they're not necessarily going to go up in value. But there are many business use cases for having stable coins, and I think that they're very, very important of what's going to happen. Okay, so now while we're talking about this stuff and talking about the banks, I do want to talk about a very important concept, switching topics just slightly. It's still connected to the banks, it's still connected to Europe, but we're going to switch to sort of see how negative interest rates are impacting people's decision to participate in cryptocurrencies. As you know, European Central Bank has sort of entered the negative interest rate market, or philosophy or line of thinking, or however you want to call it. And Bank of Japan has been doing it. US is saying no, but there is a potential that it might be yes. So what does that mean when it comes to cryptocurrencies? Because we don't often talk about that stuff, but I think it's important. And this particular article out of Forbes is incredibly important to discuss it. And so here we go. The negative interest rates are destroying the Europe's finances, driving demand for cryptocurrencies. This was incredibly interesting. Let me see if I can make it bigger, although I think every time I use Forbes and I do this, it just makes it worse, as you can see. Like, it makes it bigger, but it makes it worse. So my apologies for that. We'll kind of stick with this stuff because hopefully you can still read it and see it. In a recent Fidelity survey, about 800 institutional investors conducted between November 2019 and March 2020, half in Europe, half in the United States, a surprising result came out. Europeans are much more likely to have a positive view and to own Bitcoin or cryptocurrencies. 45% of the European institutional investors surveyed owned cryptocurrencies. This is huge. This is absolutely huge. I don't know if you realize that, but this is huge. And they're saying only 27 in United States. And that's the reason that they're basically arguing, and that I am saying, is that, in the United States, we don't have negative interest rates. And so we don't have that effect of what's going on when it comes to negative interest rates, and the fact that our money is actually not necessarily doing what it's supposed to do, and we're losing value, and we're losing market cap. And so you'll see it kind of as we go through it. And so we don't see it as a need, and not many of us. And it's an interesting piece. It's kind of like when we hit the pandemic, right? Everybody rushed to toilet paper. Now, you don't go to the bathroom more often, I don't think, I hope, right? But like we were just going in, buying food and buying toilet paper and buying all these, cleaning supplies and that kind of stuff, because something hit us in a moment and we reacted. If you were a normal human being, you probably had some rolls of toilet paper in your house anyways. You probably had cleaning supplies in your house anyways. You probably had some food in your house anyways. But because it hit us so hard, we went into the overreaction and jumped in. And so now we're looking at, the United States doesn't have the negative interest rates. We just lowered it now back to zero. People are like, it's okay, right? Like you're not seeing as much of a need. Whereas in Europe, it has been there for a few years. They can't get out of it. And now more people are saying, yeah, I absolutely see a need. I need to protect myself. Europeans now see cryptocurrency as desirable asset class. Okay. And the reason is because it no longer it protects them from the political and the technocratic sort of autocratic policies as well. And it's very interesting because typically Europeans are seen as sort of like, big on government, and US is like, no. And we're seeing this switch a little bit. And it's very interesting for me to see that. In mid 2019, Pantheon Macroeconomics did a study which showed a strong correlation between declining interest rates and housing prices as easy credit rates and hotter real estate market, to the tune of 16% increase in property prices across Europe. This is very, very important, right? So you will notice that there's a strong correlation between, I need to repeat it because I think some of you might have missed it, between declining interest rates and housing prices. And in Europe, it saw an increase of 16% property price. Okay, so as the interest rate goes down, the property prices go up. We talked about real estate in yesterday's show. And if you haven't seen it, make sure you go to the YouTube channel and go and watch it. Or you can actually just go visit One Deal Away, go to the videos page, and you'll be able to catch every kind of cool video that we got going from our channel, as well as for some other channels. So you definitely want to check that out. For 6 years, the European Central Bank tried to get its way out from negative interest, each time failing due to the need to further stimulate economic growth. European banks have lost about 50% of their value between when ECB, European Central Bank, started negative interest rates in the late 2019. Combination of negative interest rates and quantitative easing cost European banks 8 billion euros. That's a very pricey. That's a very expensive price tag. Now, the Eurozone is going through unimaginable financial and economic pain after a deep public health crisis with a record quarterly contraction of 3.6%. Bank of Spain is projecting a 15% contraction in GDP. The Global World Bank projects that it will be the largest global recession since World War II. And again, I'm going to go back on record to say I think we are getting into a depression, and that's just kind of where I see it and where I still stand. That hasn't changed. Despite this, Eurozone savings rate actually increased as European consumers were forced or shocked into huge saving glut and a massive slowdown in consumer spend independent of monetary policy. So the reason that they push, just in case you sort of don't understand, the reason that they push the negative interest rates, because the thinking behind it is that, well, if it's a negative interest rates and I'm charging you to save money, right? Not you don't get any interest back. It's not like back in the good old days where you would put your part of your salary in, and you get like annualized 10% return. Gosh, you wish, right? No, 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 no. You put money in, and now in U.S. we're like, okay, well, you don't get anything back, but you don't lose anything potentially. Um, but they're saying, no, we're actually going to charge you for keeping money there. Well, now the goal was that if we do that, that people will go in and say, well, forget it, man, I'm going to spend it. So, but what they're seeing is that people are saying, I don't care, charge me all you want. I don't trust you. I am saving this. And now, because of all that stuff, we're seeing more institutional investors saying, forget it, man. I'm jumping into crypto projects because I have ability to preserve my wealth, to grow my wealth, and I don't have to pay anybody anything, and nobody tells me what I have or don't have to do. This is the power of cryptocurrencies. The European Union is now essentially stuck in super liquidity trap, and the reason that from all of the stuff that is happening within European banks, they're basically going and saying, you know what, forget it. We're not going to go in. We're not going to participate in this. We're struggling with liquidity. We're struggling with what's going on, and we're just going to exit. We're going to sit in cryptocurrencies where we have very good ability to not just preserve, but improve our wealth. And then finally, to wrap up today's episode, and then we're going to go and hang out in the chat live. Of course, YouTube, you don't get to see that, so you're going to miss it. I'm sorry. You're watching this on YouTube. You have missed the show. But make sure you join me tomorrow at 7 a.m., and then we can hang out and, of course, live. Final piece. Billion-dollar blockchain EOS is in trouble, research shows. So this is the part that I promised you at the beginning of the show, that I'm going to talk to you about why I am so bullish on Ethereum. Now, I know it's talking about EOS, but as you know, EOS and let me see if I can zoom this in. EOS and Ethereum are both working on. Nope, this is only making it worse. Okay, are blockchains that people are building on top of, right? And so they can build smart contracts. They can create all these different projects. So developers working on EOS platform fell more than 85% compared to a year ago. Code updates track on GitHub were down a whopping 94%. EOS DApp, decentralized app activity, is down 70% over last year. That's highly troubling, right, when you look at it. So it's supposed to be growing, but it's not. It's actually going down in the number of people using it. The Outlier Ventures report notes that Ethereum dominates the decentralized computing space with 80% of all smart contracts and dApps calling the protocol home. EOS is a distant second with only 9%. This right here is the reason why I am very, very, very bullish on Ethereum and Ether as a cryptocurrency, because obviously when you have this many people going in and constantly jumping into the particular protocol, that means that it's growing, and ETH is being used to power all of those projects and smart contracts. And so that's the reason why I am so bullish on Ethereum, and why I think that the price of $600 is just lowballing it. Obviously, I don't know short term, long term, but long term, I think it's going to be way more than that. So, anyways, that's just my take on it. Okay, let's continue. The research also sees trouble lurking for Tron, which saw active developers decline more than 50%. Polkadot, who released their mainnet in May, saw monthly active developers jump more than 40% versus the previous year. Well, that makes sense, because if you just released the mainnet in May, of course you're going to see a jump now over last year. So that's a bit weird. I mean, I get it. You get the testnet, right? And so there's going to be some people in testnet, but I think most people are wait for mainnet. At least that's my interpretation and understanding. I don't know. What do you think? Let me know in the comments. Let me know in the chat. Let's talk about it. Let's understand. Kind of, maybe I need to learn something that I don't understand here. Cosmos. So active developers grow 15% over last year. Theta and Cardano are also seeing significant development, with code updates increase 930 and 580% respectively. So there you go. This is kind of one of those things of, a question is, and I don't know, where do you stand? Let me know. Our Tron and EOS basically dying off. And, our Cosmos, Theta, and Cardano, good places to come in and jump in. I don't know. Let me know what you think. So there you go. This is what I have for you today. That's all I got, and we're out of time. Now we're going to stop streaming for everybody on YouTube. So thank you for watching, and then I'm gonna go in and hang out with folks watching live. So thanks for watching. Until next time, stay forever money blessed, and do remember, you are only one deal away.